Let me start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Welcome to the new week, 16th to 20th of November. And on 16th of November, between 5 and 5:30 GMT, I'll be giving the Asian session live market analysis and the forecast for this week, 16th to 20th of November. So, as usual, I'll give the session-wise forecast for all the 5 days of the week. And also, we will have a discussion with regard to the range in which the currencies are expected to swing. Then also, I will explain to you about the trading strategy which we need to follow. And finally, I will give the recommended trades which can be incorporated in a demo trading platform and find the suitability of the forecast. So to start with, let us see the expected market moves for this week. Okay, this week, 16th to 20th, is being the third week of November. The players are expected to make the week beginning brief false move, followed by that rise. So the week beginning false move could be during that of the Japanese session. And also we have an excuse that attack in Paris, and based on that, they made a drop in the case of Euro, and also they made the drop in the case of GBP and also USD yen. That is mainly to drop the yen crosses. And also you come across the commodity crosses. Commodity pairs are showing negative net change, so the players are handling the commodity crosses as well. So excepting USD CHF, all other currencies are in negative net change. So that means they are actively handling the crosses before coming to that of the majors. But it may appear to many people that because of the Paris incident, the market might show more of USD gaining more. But it is not like that. So always you would have noticed in the market that there will be a knee-jerk reaction as soon as the market opens. Afterwards, they will say that it is being discounted. And then they talk about the new events or about the other upcoming events. So as a result, you find the players create the market sentiment and act against that of the traders. That we have to keep it in mind. So today, they are expected to make the swing and slide. Already they made the slide, and they could be holding near that of the low till close of Japanese session and make a brief downward stop and if needed below that of the lows, and then start making the rise in the case of Euro and GBP. Probably they might use someone's statement or any other information as a trigger and start gaining the levels in the case of Euro and GBP. And during that of the US session, they are expected to make the swing and firm up move. Then tomorrow, they are expected to make a drop during start of the Japanese session and then rise. Then followed by that a firming up move is expected during the European session, and then they will slide again. That will give the impression to that of many traders that any bounce back, it is nothing but the dead cat bounce back, so we should sell. That's how they will give that impression to that of the traders. And afterwards, they will continue to gain the levels from Wednesday and then make sideways move and then rise during the US session as well. Then Thursday, they are expected to make the swing and slide during the Japanese session and then start rising from the European session. And on Friday, 20th of November, they are expected to make the rise during Japanese session and swing and slide during the European session and then swing and rise. And again next week, 23rd to 27th, That will be the fourth week of the month of November. So they are expected to make the trending move on the upside. Then we come across the following week. You find 30th of November falls in that week. Followed by that, you come across the early part of December. And during that time, they are expected to make the monthly trend reversal. So next week, they are not going to make the monthly trend reversal. They are expected to make the swing and rise moves in the market. With regard to the levels in which the currencies are expected to swing, Euro could touch briefly 1.0650 during a downward stop or closer to that, and then start gaining the levels above that of the high what is set now. In the case of GBP, it could gain more levels and then change the entire market sentiment. And you know very well, players use GBP to create the market sentiment. When everybody is talking about euro and probably euro could go to parity and things like that, suddenly they will rise GBP and then they will create that positive sentiment towards that of the other currencies, other majors. As a result, once GBP started gaining the levels, other currencies are also expected to gain the levels. In that process, people might simply discount what is happening in Europe. Then in the case of USD, they are expected to make push on the downside to that of 121.50 area and then start gaining it again, similar to that of the negative net change you come across here. During the course of the week, they will make the positive net change in the case of Euro USD, USDN, and GBP. So the downward moves are buy opportunities. Afterwards, they are expected to gain the levels in the case of the yen crosses. By gaining more levels in yen, followed by that they will hold high and euro and GBP will also gain levels. Then in the case of CHF, they have already gained the levels above that of parity. They are expected to swing around and they could periodically take out their stops below that of the parity and then start gaining the levels. So more of a consolidation and distribution of the positions will happen and they will try to lighten their position before making further rise in the case of USD CHF. In USD CAD, again, they are expected to make the wide range swings. Then they are expected to make the high level consolidation and then start making the slide. In the case of USD Australian dollar, they are expected to make the lower level consolidation and then start gaining the levels. There is a question from Grace. How long do you think that the price of gold and oil can rise? I am still medium term bearish in oil. See, they are expected to gain the level slowly in the case of oil and gold from this week. For year end, there could be aggressive gaining moves, and during early part of 2016, you could come across more quick gains happening in the case of gold and oil, similar to that of the majors. Now we will come to that of the market reading by referring to that of the initial lows and the highs. They are set around 3:30 GMT today. So euro formed the low 1.0688 and 1.0745 is the high. They are not breached the low or the high still. Then in the case of GBP, 1.5207 is the low, 1.5232 is the high. They are not breached the low or the high. Then in the case of USD, 122.23 is the low, 122.61 is the high. They are not breached the low or the high. Then USD CHF, 1.0058 is the low, 1.0091 is the high. Here again, they are not breached the lows or the highs. Then as far as Canadian dollar is concerned, 1.3304 is the low, 1.3336 is the high. There again, they are not breached it. And in the case of Australian dollar, 0.7100 is the low, 0.7130 is the high. So here again they are not breached. So that indicates very clearly the traders are very cautious. They are not committing positions. So when the traders are not committing positions, the players are making only the swings between the high and the low without breaching the high or the low till now. What they are set around 330, the initial lows and the highs, still they are not breached them. So towards late Japanese session, they could make the breaching of those levels and induce the traders to commit positions. Normally what happens when they quickly make a drop, the traders go on sell. When they quickly make a rise, the traders go on buy by following the technicals, telling that the trend is your friend and then try to enter into the market. So initially, the players will try to use that concept and then try to attract the traders to participate in the market. Only when the traders commit positions, the players have got a role or they can make up or down move in order to make money. When the traders are not committing positions and they are keeping away from the other market, then you come across the holiday move and the players may not be making any headway. So not breaching the lows and the highs so far indicate that they are trying to hold the market without much of a significant move. Jag has got a question. If the oil rises, then will Canadian dollar also rise? Yes, USD CAD will come down. That means Canadian dollar will strengthen in line with that of oil gains. So as far as the market reading is concerned, we come across that the majors and the commodity pairs have not breached the low or the high. Now we will come to that of the trading. So as far as trading is concerned, as I explained that they are expected to make a downward stop and before making a rise during that of the Japanese session. So we'll keep a buy limit order in the case of euro near low 1.0688. Probably they may do about 5-10 pips if needed, a downward stop and below, and then start gaining the levels. So we'll keep exactly near that of the low 1.0688, the buy limit order, and the sell stop 1.0658, 30 pips below, and exit level we can keep 45 pips above that of the entry. In the case of GBP, 1.5207 is the low, so we'll keep a buy limit order near that, and the exit 45 pips above. Then hedge order 1.51. So in these two currencies, I'm just giving you the trade call, which can be tried in a demo trading account. And so we will keep near that of the low, the buy limit in the case of euro and GBP, for the simple reason they are not breached the high or the low, they are holding the middle level. They are likely to make a brief downward stop and before making an upward move And if you are really watching it, when they are making a brief downward move during that of the late Japanese session, you can try to take a buy. Otherwise, you can keep near that of the low, a buy, and keep 30 pips hedge order so that they will be able to fill it. If you want to be a smart trader, watch during that of the late Japanese session and try to pick up. Once they form the new low and not breach the low for 10 minutes, then you can buy. That will give you a quick profit, and then you can quickly keep stop at entry and then trail the stop when the position is making profit, and keep 45 pips limit order to exit out of the position. So this is the trade recommendation in the case of Euro and GBP I have given it. And since in the case of all the three majors here, Euro, GBP and USD, they are showing negative net change. They might push down USD yen a little bit to the low before making an upward move. So in the case of USD yen, you can keep a buy limit order from 22.23 near that of the low, and keep 45 pips limit order to exit on 22.8 as a limit order, and the sell stop. $121.93. So since they are making the contrarian move, after making a downward move, they could make further downward move in the case of USD yen to trigger upward move in the case of Euro and GBP, and later on they will gain the levels in the case of USD yen as well. So they are handling the commodity, the yen crosses and also the commodity crosses by showing the contrarian move. So you can take the advantage by taking a contrarian trade, that is buy in the case of Euro and GBP as well as buy in the case of USD yen. So the late session starts by 6 GMT. From 6 to 7:30 GMT, they are expected to make a downward move as seen it in the forecast. So afterwards, during the European session, they are expected to gain the levels. During that time, you can try to book profit or keep stop at entry and maximize the profit during the US session if possible. And what you have to do is you should patiently wait and take the profit. Otherwise, use the trailing stop. The even trailing stop is filled when the market is not coming down in a big way. Then re-enter again, buy and book profit. That way also you can do it. So if you've got any question, you can ask me in the question and answer window, and I'll be willing to answer those questions. Grace, how will terrorism affect the commodity currency? As far as terrorism is concerned, it is an event of threat, nothing more than that. And it is not a war or something like that. So when there is an event of threat, normally a knee-jerk reaction will be there, and subsequently the government will act appropriately. It is not difficult for the governments to act against such terrorists. So because the terrorists are normally in lesser number, it is not like a war wherein you come across probably the equal number of people might fight against. So here it's a question of only a handful of people trying to create the surprise to that of the governments by making such cowardice move. So easily the governments can handle it. And only thing is, initially there will be a chaotic condition because it will be a surprise, and later on the crisis management will happen. And once this happens, all other countries will try to develop the contingency plans. So there won't be any crisis management. And with the help of the contingency plan, they will be able to handle the situation. They will tighten the situations. So don't think that the terrorism will be creating much of an influence to the market for a longer period. Any other question? Because the past history also show the same. There are questions you can ask me. I will answer those questions. Meanwhile, I'll show you the focus slide. This is the expected market moves for this week. And you come across the expected range in which the currencies are expected to swing. So keep in mind that the players might make the market appear bearish and induce the traders to take sell positions. And later on, they will try to trap the traders. So that's what, once the traders commit positions. So keep in mind that whatever the sentiments they create in the market is an apparent sentiment, but that players act again that later on. So you have to be very smart in smelling it. Then, Michael, can you say more about your views on the technical saying the trend is your friend? Okay. Normally, uh, in the beginning, when I was trying to give my forecast, which is a totally a different method of approaching the market, that is the player's intentions. Then I was telling you what are the constraints I faced by using the technicals and the fundamentals. No, and later on I found that many of the analysts uh, felt that it is against their view. Then I stopped it because that is not my objective. I do not want to hurt any of the other analysts because they are also trying to use their own knowledge and then try to predict the market. So I'm not in any way to underestimate it because technicals and fundamentals will work very well if the market is not manipulated. So if the market is manipulated, what the players do, they simply make the market appear following technicals and fundamentals so that the traders get convinced, okay, yeah, the technicals are the right tools. And then all the terminologies pertaining to that of the technicals, namely trend is your friend and all other aspects, they try to go with it of the market, etc. Then the traders freely commit positions. The volume increases. Then it becomes a big harvest for the players because when more and more traders commit positions, they simply induce induce a rumor, or simply they may give an interpretation pertaining to that of the some of the statements, or they may simply give a derivation out of an event. Suppose the non-farm payroll, or suppose the FOMC meet, then they will simply say, other day probably you might be knowing on Friday when Ellen's speech, she has not made a mention about the December event. So not mentioning that about the December when they started gaining quickly the levels in the case of Euro and GBP. So they can give any sort of interpretation of that nature, which will give a surprise to the other traders. So that is the basic thing. So they induce the traders to commit positions. So once we follow technicals and fundamentals, what will happen? When the going is good, then we think that, okay, we can commit more positions because I am earning money from that other market, following technicals and fundamentals. Then later on, you will find that, no, it is better to follow only the technicals. Fundamentals probably come and go, but technicals give the real picture about the market. Then we going for moving averages, going for supports and the resistance, etc., and take positions. And also we think about the risk reward ratio. Okay, we aim for 300 pips profit, keep 100 pips away the stop. So the 3:1 ratio, the risk reward. So the reward is 300 times and the risk is only 100 times. So it is a good trade plan. So immediately you try to follow that and keep it. What the players do, they drop about 115 pips from the support level. So once they make a downward move, immediately your stop is triggered. You incur a huge loss of 100 pips to start with. Then later on, you think that, okay, the market has breached the supports and the support has turned resistance. It is not able to go above that. So we'll do sell and buy trade. Then immediately think about the dead cat bounce back. So any pullback is a sell opportunity. That is what everybody will say. And always keep in mind the long-term trend is going to be the rewarding factor. Then all the traders will be waiting for the market to go up and then take sell positions. First of all, we have to ask one question. When Euro is available around 1.07, where is the question of rising it to 1.08 level in order to buy it? So somebody is buying it up to that level. What is the intention? Somebody is buying, and also we cannot place such orders in our online trading platforms. In online trading platform, if you want to buy when Euro is around 1.0723, if you keep 1.0735, it will get rejected. And you can keep only a limit order. You can keep only a limit order, but you cannot do a market order. We cannot place a market order when the above that of the market a buy order or below that of the market a sell order. It can be only a stop. So only in the banks such trades are being done. And you know that the banks are not supposed to participate in trading, and that is considered as insider trading. So who else can make use of the bank to trade? So this is how it goes. So ultimately, you know, the traders, the players try to make the market appear that technicals and fundamentals work well. And once the traders commit positions and suddenly make a surprise reversal move and make it very aggressive, so that by the time the traders going for averaging and going further averaging, thinking that it is only a trick, some mischievous people have just pushed Euro and JPB still at the higher side, and it could come down. But the players suddenly make shift in trading zone. Then you find such traders vulnerably get caught and lose huge money. Then later on they will say, oh no, I don't follow technicals and fundamentals. I have my own system. So you find that predominant of the people now try to say that I have my own system. I combine this parabolic curve with that of Fibonacci retracement. I combine this MACD with simple moving averages or exponential moving averages. So you find that they go in for various combinations, and simply they're trying to explore and find out the reliability. And you know that it will appear that such type of analysis work for some time. And then later on, the market, when it changes, is the dynamics then immediately they will think that it is no more working. That is why you come across so many people when they think that the technicals are working very well, they go in for automatic trading, following such understandings. And initially, such trades go well, and later on, you find every trade you find the stop is being triggered. Then they silently withdraw it and come out with another name, some other trading strategy. And then they come out with this and they say that these are all the conditions when met, our automatic trading system will take the positions. And again, it will give profit for a few days. And later on, when the players change their sentiment, then all the stops will be triggered. So this is how you find that whether you manually do it or automatically do it, invariably, if you don't understand, somebody is pushing the market against me. Unless and otherwise, I'm not able to read the other man's intention, I'm not going to be very successful. So when you are walking along the road or when you are traveling in a train and a new person is acquainted with you and that person talks to you very nicely, and in your mind it is ringing whether he is trying to trap me or he is going to be a genuine friend to spend the time when you are traveling together. So this will be ringing in your mind for a long time. So you try to read his intentions based on his expressions, based on his offerings, based on his behavior, etc. So you slowly gain confidence. Okay, he is not going to be a threat. Then you acquaint him with him. So in the same way, you have to find out somebody is playing a trick. The banks are being used as a tool, and then the players make the moves in the market. And we know very well that only by cunning methods money can be earned from that other money market. So when the money has to multiply just like that without converting into effort, the only possible method is cunning means. So somebody is having a store and he buys it for $10 and sell it for $11. So $1 is his profit. And he say that he is selling at the lowest level or with a discount and whatever it is. So he simply says that the price is $15. I am reducing it and giving it at $11. They are all nothing but cunningness. What is cunningness? Try to convince you that this is what is real. So cunningness is nothing but trying to convince with false excuses. So for the players, the technicals and fundamentals become false excuses. That's all. So they will pretend as if the support is breached and it goes down. Then immediately you think that support turns resistance. You try to take a sell, and finally in 10 minutes you find the market reverse and start gaining in an upward move in a big way. And you become vulnerably trapped, realizing that at this lowest level you are taken a sell. So a common sense will say that after the drop, what is the big idea of selling? What is the big idea of buying after the rise? So buy near low, sell near high is common practice. But when you follow technicals, we go in for the next level of trading, namely breakout trade, because none of the trades work out for consistently. Then you go in for a breakout trade. Then in the breakout trade, once they breach the support, once they breach the resistance and resistance turns support, you buy it. Then afterwards the players drop it and you get caught. So you find invariably, if you blindly follow technicals and fundamentals without using the common sense, you might end up in problem. I do not want to talk more negative about the technicals being a statistics professor because it will work very well. Unfortunately, the players are against. Okay, there is another question. Hassan has got a question. Could hardly differ the intentional move from that of the extended move? Is it problem due to the action? Please explain briefly how to understand. See, the extended move is a quick move, whereas the intentional move will be a slow move. Extended move, they just form the new low, stop cutting the new low for 10 to 30 minutes. And afterwards, they don't cut it for 2 hours, but still stay below that of the initial low and then go up. And that is extended move. Whereas intentional move is the one, say if it is on the upside, what they do is they make a brief downward stop and go above that of the initial high, stay there for more than 30 minutes, continue to gain every 30 minutes, breach the new high, breach the new high, breach the new high. And that is how they continue to gain the levels. That is intentional move. Then on the whole, still a positive market with the USD rising. The market is expected to show a surprise if you think that the USD is going to rise. Because see, the players are in US. They do not want the US dollar to become strong all the time. They make the US dollar strong and make all other currencies weak, invest all their money in other currencies, and rig and rise all the other currencies and book profit. That's why I call the US dollar as a sleeping giant. So for some time, US dollar will appear very strong, but a sleeping giant does not keep awake for a long time. Then, yeah. If possible, could you draw what do you mean by those moves, swing and firm up exit? Oh, I have been explaining it during my Tracking the Forex Market Together webinar, and unfortunately, after coming to that of the this YouTube video presentation of the webinars, I am not able to find a suitable time to present the Tracking the Forex Market Together webinar. We are still working in FX Street, myself and FX Street. So very soon we will come out with a solution. Then I will explain in detail about the various type of moves. But if you are curious to know about it, there are other recorded webinars which are listed under my profile. There you go to any of the Tracking the Forex Market Together webinar, there they are all being explained. Otherwise, you go to my profile and click 2010 webinar presentation. There I have presented my trading system, explaining all the trading details pertaining to my trading system in 10 webinars. If you listen to that, you'll be able to get all those informations. But little bit of digging is needed, but you'll be able to really get the fruit out of that. Are we expecting higher level for Euro 1.09 level this week? Yeah, it is most likely Euro to break this monotonous bearish move. On Friday, the Euro buy position turns out to be a loss and then hedged. So if you would have taken a high level buy, then probably it would have been a loss. But towards close of the Japanese session, towards the close of US session, they gained again the levels, and you could have booked profit. But as I told you, buying after that of the rise and selling after that of the drop might test your patience. But after making initial drop during the US session, they made the rise during the late US session on Friday. So if you use the hedging, you could have booked a profit in the hedging, and then subsequently you could have booked the profit on the buy side. Because see, when there is so much of uncertainty in the market, only hedging and the trading strategy can help you really in making money. Right. So I take this opportunity to thank FX Street for the facilities provided to present the webinar, and you people for your patient listening. And I'll come back on Friday and give the review of the forecast what I have given. Let us see how far they are gaining the levels in the case of Euro And then we will be able to understand how the players create the market sentiment and act against that of the traders. Thank you, one and all, for your patient listening. See you on Friday.